Hi guys, and welcome to this second part of my Cloudy series, in which I'm going to explain how to use Cloudy Dynamic support and resistance for your personal trading and in your personal trading. So what we want to do is to learn how to read this chart with Cloudy on it, what to look for, how to devise strategies based on the information Cloudy gives us. The warning signs, the confirmation signs, everything we need to know in order to come up with a very good trading plan, trading strategy, and to avoid doing mistakes, to optimize our risk management, all based on this indicator. So let's start right away. This chart here is Dogecoin, USDT 15 minutes. And as you can see, we're here looking at Cloudy, analyzing the Dogecoin low time frame price action. It takes a while to load. Sometimes it can take a few seconds for Cloudy to load the data and analyze the dynamic support and resistance, as you can see. These settings, let me let me move this down here. The settings I'm using here are not optimized. You can certainly find better settings, but these are already pretty good to find certain setups and to make a lot of money scalping, for example, because it's a low time frame. So this is more for quick scalps. You can, of course, set Cloudy to swing trade mode or even higher. All of this is possible. So what we're going to do here is to look at what Cloudy is telling us. Let's start in this area. Imagine, let's go back to this point here and let Cloudy reanalyze this range. And then we are going to look at what Cloudy is telling us and what we can expect from price action in the next days. So here you can see a day is about this long. So here are a few days. So here you can see we have these green, yellow, sometimes even teal support clouds, and we have the orange, purple, and sometimes red resistance clouds. And it is very important to understand the color code. Let me write this down on the chart. So we have orange, the color orange. Of course, you can customize these colors, but I'm just telling you about the default settings now. You have orange clouds, which means it is basic resistance. And there are different types of orange. If I zoom in, you can see there is this bright orange and there's a darker, more transparent orange. So there's a strength built into that color. The brighter it is, the stronger the resistance. So this is very, very important. Then you have another level, which is purple. And purple is strong resistance. So if you see a purple dots, purple clouds like here, this one, you can expect there to be very strong resistance. It usually leads to rejections, but there are exceptions I'm going to talk about in a few minutes. And then the final stage of resistance is the extreme resistance, and this is red. So if you see red dots, red clouds like here, you can see that price pierces through the red dots and it initiates a complete downtrend. So basically the red dots are super strong warning signals that we might see a down move, complete trend developing even. This is because red and purple, but more red areas are confluence zones that have tremendous power, and they can send price very far away from them. So this is very crucial to understand that there is this system in place for resistance, and we have the exact same system for support, and we have basic support, which is the green color. We also have brighter greens and darker greens, or more transparent greens. This is also indication of the strength. Then we have the strong support. This is the yellow one. So if you see yellow dots like down here, for example, or here, this means there is strong support. It's the equivalent to purple. And you got the extreme support. Extreme support, and this is aqua or teal, however you want to call it. This is the equivalent to red. So let me move this here. You have this color code. And looking at the chart tells you which zone is extremely strong. So here you can see we are in a downtrend on the 15-minute. Price, in this downtrend, price is approaching support zone right here as price is spiking, or it's falling into the support cloud here. You can see the dots are green. Then we see a bounce. And from this bounce onwards, the dots change their color, the inner dots, and you can see that a stronger support is evolving from this point on. This has something to do because price action forces dynamic support to gather at the spot because there is support coming from down below, and there is support that is pushed down because of the price action that is, and the dynamic support is following price action. I explained this already in the first part with a moving average. So you have the dynamic support that is coming down. You can see it here with the tiny dots here, the green, but it's not enough to keep price up. So the support that is available here is being pushed or pressed down into this region. You have this stream of support running through here, and you have support coming from below, which is invisible because it's not strong enough. But all of this is, it's being accumulated. It's gathering here in this exact area because price is falling into this. And once this happens, the support here turns into very strong support, as you can see, extreme support even. And the retest of this leads to a very strong, sharp up move. And bears are still in control here. You have to imagine that this trend is very, very bearish. And you can see that it bounces violently off the support. It confirms that what Cloudy is telling us, that there's extreme support over here. It confirms this. And it confirms this even more when we see that price returns to this level over and over again and pierces into that and still manages to bounce violently. This tells us it's true. There's very strong extreme support over here. So you can trust this color code. It is very, very effective, precise, and it tells you very accurately where support and resistance is. Cloudy is made to make certain things visible that remain invisible for most traders. A lot of traders can guess, or they can estimate, they can, maybe their gut feeling or their intuition tells them there is support here and it's becoming stronger. But Cloudy makes this visible. It makes it so much easier to keep an eye on whatever is important on the chart right now. So if you use this in addition to price action, in addition to your price action analysis, like levels, trend lines, momentum, trend, whatever, swing low retest, for example, we tested this level here with this wick, got rejected. Very typical movements we see here. And they match perfectly with what Cloudy is telling us with, for example, the resistance zone up here, where we get rejected, the support zone down here, which held price up for so long. Yeah, and this is how you can get a first feeling for what Cloudy is analyzing here. What is it telling you? In this case, for example, you see that price is grinding into this resistance. This is very typical behavior. It's something that you have to get used to because in a strong trend, we don't always see a reversion right away. What we see is that when the momentum is strong, for example, like here, we have strong momentum to the upside in this move, then price starts digging into this resistance. It's getting rejected over and over again, but the bulls manage to hold the key levels and produce higher lows. And when this happens, we have a trend going on. But as you can see with the rejections, these rejections, how sharp and how fast and how often they occur, tells us about the trend itself. How strong is it compared to this resistance? And you see the resistance is not as strong. It's there. You have basic resistance here, but it's not super strong. It's not like over here, red and purple. But we still see heavy sell-offs here over and over again. This is a warning sign that this move might be too weak overall to produce a much larger trend to the upside. So what we are seeing here is that price ultimately pushes resistance so much higher than it joins with this. We have a stream of resistance coming down here, which is running here, running through this region. And we have this stream that is being pushed higher, and it's joining up with this stream. And we have, of course, we have something like this also going on, which we don't see because it's not relevant on its own, but it becomes relevant at this point. This is how dynamic support and resistance works. Most of it is invisible, and Cloudy only makes that bit visible that is really important to us. Imagine the entire chart being a huge spider web. The entire chart you see is a huge spider web, and the more you move within this spider web, the stronger certain parts become, because the webs, the single strings, join up with each other and they form stronger strings because you push them together. And this is what is happening here. This move, this bullish trend, local trend, is pushing resistance up to the degree that all this resistance up here is joining up with each other and forming a very strong layer of resistance. And Cloudy knows this, and it evaluates these strings of resistance. It tells you with the colors how strong they are. And here you can see we have this uptrend, but it is getting sold over and over again. Bulls still manage to hold higher lows, but just like that. And finally, when it approaches this resistance region over here, where it's very strong, we see a much sharper sell-off, blow-off like structure here. And this is the trend reversal. This is the confirmation that bulls are simply not strong enough to break this kind of resistance. This is the top. And we know this because Cloudy is telling us this. You see the dots have been printed in advance. Not much before the sell-off candle actually happened, but sometimes it develops very fast, and you have to be aware of sudden changes in the market. It's not like with a level that remains the same all the time, where you have full control over it. Dynamic support and resistance is called dynamic for a reason, because everything is changing, and sometimes changes happen very fast, and you don't have much time to act on them. This is why it's important to learn how to get a feeling for this and to observe how this works. The most important thing is you don't get stressed out by all the things that are happening here. You have to get used to them. Learn about when to expect these strong clouds to appear. For example, when you see a string or these clouds coming down here, you can do a projection like this. You see this, and you know where the trend lines or where these projections meet up, where they cross. And this is the region where we can expect very strong resistance, extreme resistance. And this is maybe when we see there's weakness here already, this might be the region where we will see our local top. And this is perfectly tradable. It is super easy to trade because you always know where the resistance is and where you might put your stop loss. If you combine your knowledge on price action with that on dynamic support and resistance and Cloudy, you know where to put your stop loss. For example, you see we have a high. We made a high over here, and we want to see. We know that this entire region here is a resistance region. Let me make this orange. So we know this entire region is a resistance region. So you can, for example, say I'm going to enter here in this where the red and purple dots are spawning, enter short, and I'm going to put my stop loss maybe above this resistance zone. So you have quite a margin to the clouds, which is good. It's always good to have some kind of margin, especially because when you're messing with the settings of Cloudy. So now you have a decent risk reward, because if this rejects over here at these clouds, we can expect a major move down, at least to this support region, and it happened. And as you can see, the risk reward of this stop loss distance and this profit target distance is excellent. It's very good. And the chances to see this play out are very high, because when you see purple and red, the chances are very good that this trade will be successful. So you can apply the same logic to support. In this case, for example, you see here is the entry zone at the clouds. You can look for a level below the clouds. Sometimes you have to zoom out a bit. Let's see, we have a low here. Let's imagine that this low will hold and bulls will produce a higher low. Then we would like to place our stop loss somewhere here. And then you see, bears can certainly grind into this a little bit more, but they are riding this support down to the swing low. And here's additional support, static support. And this is joining up. So you combine your knowledge on price action with your knowledge on dynamic support. And what happens? Confluence appears. So basically you have this merging together. The static support and the dynamic support is merging in this region. So you can expect a move up, and this is what happened, and it was very violent. This would have been a great trade. Also very good risk reward. Of course, yeah, we saw a dump back down, but this is not surprising, because bulls already managed to bounce several times off the support. And as you can see, it became a little bit weaker over here, and the rejection here was simply too strong. So after seeing this kind of blow off, you could have left the remaining position, remaining size of your position, long position at this point, because it would probably go down. And you have to expect, even if this is extreme support, when the trend is down and you see a harsh rejection, you have to expect this support to get broken. It's not that extreme support and resistance always holds. This is not true. The trend is the superior concept. So the trend tells you what will happen. The trend is the master, basically. It's dominant. It's a dominant occurrence in markets. And dynamic support and resistance is adapting to the trend and the momentum and volatility, and it tries to give price a range, a dynamic range to trade in. And as you can see, it's working. It works. However, sometimes when the trend is strong, price action likes to break dynamic ranges, like in this case. They get broken, and you see that they are broken by looking at candle closes below the clouds. This is what tells you they are broken. And when they are broken, you can expect some kind of downtrend, in this case, some kind of downtrend to occur. And price has to find a new range. And it takes some time for the support to come down here and establish something new. This is the time where we often see falling wedge-like structures, where price is trying to find support in an area where then there is a dynamic support slowly building a base somewhere. And this base doesn't necessarily have to be permanent and send price back up. As you know, when we're on a downtrend, the trend is down. This means we can certainly see continuation down. And a price doesn't necessarily have to reach the resistance area in this case to continue down, because the trend is stronger. And when bears are in full force, they don't even need to reach resistance, dynamic resistance, to get rejected. You can see this series of lower highs is already sufficient in order to send price lower here. So let's look at this bit of price action. As you can see, we got a close down here within these clouds. These clouds are bending down. They are trying to follow price, but they are not strong enough to keep price stable and to keep price up. So this downtrend is in full motion, and it's breaking the range once again. This is a very common occurrence because a trend is simply stronger. And you don't have to fear this happening. This is normal, and you can see in most cases you can see this happen in advance. But for this, you need to apply your knowledge on price action and trend. So let's have a look at, for example, this situation over here. Here you can see we have the support range here, and price is bouncing off it first. You can see we have a tiny bounce, and then this sharp sell-off into support. And this candle is confirmation that bears are strong enough to violate the support range. And when this happens, you have to expect that price will probably crash through the trading range or trading range support, which happened with this move here. So price gives you some candles, some warning candles very often. Not always, but in many cases, you see warning candles. Let's look at this case, for example. You can see price closed candles directly above the support range here. This in itself is a warning sign because you can see the weakness. You can see there is no strong bounce. And when price tries to bounce, it gets sold directly. This is the warning sign you need to identify, to spot in the charts, to know that bulls are simply not strong enough at this dynamic support to hold price up, and it will probably attack support and violate support and then initiate a downtrend. And this is what happened here as well. Let's look at more examples where we can see something like this happen. This is Dogecoin, and Dogecoin is maybe not the best example because it's a highly, highly volatile asset. This is probably, let me switch to Bitcoin because it's a little bit easier to explain. So on Bitcoin, we once again see a sharp sell-off, sharp volume-driven down move over here, and here you can see that once again price crushed our 15-minute support, dynamic trading range support. It happened with this candle, but you can see the warning signs in advance. Look at this. Support is starting up here already. We have some dots, but these are usually not strong enough. So this move down can be expected. But here you got yellow and teal or aqua colored support. So what we are expecting here is to see a sharp move up. Maybe it gets sold, but at least we want to see a sharp move up. We didn't see this. We had a bullish engulfing candle, but it got sold directly and was very weak. This in itself is a warning sign, and it should tell you, holy shit, we have so strong support and bulls are just miserable here. They don't manage to produce at least a new high in this local region, get back some levels here. Simply not possible. So you can tell from this price action that this will probably continue down, break the range. So this is even maybe a chance to look for shorts if price action allows for that. However, in general, I would not suggest or recommend to short support, and I would not recommend to long resistance. It is very dangerous. I would do it the opposite way. I would say look for shorts at resistance, look for longs at support. But if price action is weak and you see the warning signs, get out of your long or minimize the risk, or simply prioritize capital preservation. Be careful, and if you're if you want to be on the safe side, you would get out here because it's simply too dangerous with this kind of grind into support. Sure, sometimes this happens. It happens, but if you want to prefer risk management, you would want to sell if you see the weakness and the warning signs. In this case, for example, you can see prices moving into these clouds. It is closing up here. It's almost piercing through the entire resistance zone and then proceeding sideways. This is also a warning sign. It could have gone higher here, but it did not. It actually rejected. However, in this case, if you want to be on the safe side, I would have closed the short as well, simply because it is very dangerous to see this huge and violent candle violating the resistance, especially red and purple resistance like this. It's a warning sign for me that bulls might break through here. It didn't happen. Sure, we know why it didn't happen, because we had this point of control level over here. We had a trend line coming down. There are several reasons why bulls didn't manage to get through. However, if you trade solely based on Cloudy, you would want to get out here and don't short this. Or you put your stop loss very close, very tight, let it play out here, see if it rejects. Put your stop loss somewhere very close above here, so your risk is minimized and you still have the chance of this rejection playing out. In this case, it's fairly simple. You see rejection here already. It pokes into the red clouds and purple clouds here once and rejects hard. This was a very, very easy trade that I took, by the way. So you can trade this in 1,000 different ways. You can come up with your own strategies. You can come up with your own settings. You can use the assets you want. But of course, you have to get a feeling for if the settings are very good for your asset, for your time frame that you're using. And you have to see if you can spot the warning signs and confirmation signs that are important to know when trading with Cloudy. And I would always recommend to use price action on top of this, or basically maybe even more. You use price action and on top you use Cloudy. Price action is basically what you should use every time. Price action is the ultimate knowledge in TA. So if you know about price action, you do your analysis and then let you confirm your ideas by looking at Cloudy. And both tells you the same. There's confluence and you see there's a trend line. Okay, that's not a trend line. There's a trend line here and there's resistance over here, so we can expect rejection. These are the perfect scenarios. You can make a lot of money in a very easy way with very basic TA knowledge, but you have to always do proper risk management, never risk too much, and you have to learn how to handle moving clouds, because this can be quite tricky, especially when you see price grinding into this higher and higher and higher. You have entered here, your stop loss is here, you see it grinding higher. What do you do? I would suggest in this case that you simply let your stop loss get hit or get out early if you see that price is too strong at resistance, and wait for a higher entry when the move has shown or has already given you some hints on that it's getting weaker. And the resistance is getting stronger. You can see this with Cloudy very easily. For example, the resistance from this point on was very strong, but we had these sharp moves up. This is still a sign that we might see further up. And let it run out. You see sharp move, smaller move, and then retracement. And this is the moment where you can still go in with a short and put your stop loss up here, because a retracement and pullbacks from red clouds are usually, there's a high probability that they will lead to stronger rejection and maybe even a reversal. Okay. This is a lot of content, a lot of knowledge to take in, but it's important. And there's one more thing that is very, very crucial. On my YouTube channel, I have a video in the deep dive playlist. It's actually the only deep dive I have right now. It is called a deep dive, TA deep dive on pressure zones. And Cloudy is an indicator that makes pressure zones visible. You can, with Cloudy, see where pressure zones are, and you can see when they will break, and you can see in what direction they will probably break. For example, let me show you a good example of a pressure zone. This is the 15-minute chart. Okay, let's look at this one. A pressure zone. I highly recommend you to I highly suggest you to watch the video on pressure zones, because it is very important knowledge in combination with Cloudy. Here you can see that resistance clouds and support clouds are very, very narrow. You have, let me see, a trading range of 1.5%. This is very low, very small, or very narrow. So you have this narrow trading range, and you can see that the resistance clouds are moving down and the support clouds are moving higher. So it even becomes tighter. And you see that price has trouble getting above the resistance, but it is also supported down here at this support. So what you want to look at, firstly, the first thing you know is this will lead to volatility. We're in a pressure zone. The pressure zone will, in 90+% of the cases, result in a strong move. A strong move doesn't need to be one candle. It can be a trend, like this trend. And you always have to consider the time frame you're on. If you're looking at the 15-minute chart, of course, it's not a 30% move we're talking about. This is always in relation to usual price movements. But if you see there are strong support and resistance clouds involved, like red clouds over here, and we might even have teal and yellow clouds down here, then you know the pressure is very strong. And when the pressure is strong and the clouds are tight and becoming tighter and converging here, you know it's time to break out with a bang. And this is what usually happens. Sometimes the breakout is weak. For example, in this case, you can see we have this move down into support and then a bounce. This is not super strong, but you can see that now there is more space. So this is actually a breakout of this pressure zone, and these breakouts are very sustainable. This means that price, as you can see, has decided to go down here. So it will probably continue to go down, and you can witness this happen with these small bounces on support, and it doesn't even come close to the resistance area anymore. This is confirmation that we are dealing with a breakout or bearish breakout of this pressure zone. How to see this in advance? Firstly, you can spot this breakout with this candle because it closed deep into the support territory and the bounce was weak. This is the confirmation you need after this kind of super pressure zone we had here. So here you know that we will probably continue lower, and if you wait for a bounce, short this, maybe you get a nice trade in. This is also possible. Although I have to repeat, I would not suggest to short support. You could have shorted up here already because this is the resistance range. And you could have hedge longed here. All of this is possible. You have to find your own strategies, how to deal with Cloudy. There are a lot of different ways you can handle this, actually. Just be creative. You have all the information you need in order to make money. Everything you need is a clear mind, a plan, and the understanding how this works, what to look for, and to act on what you see. You see this? Well, this after a pressure zone of this scale, you see this? Sure, it could bounce higher and go nuts here. This is possible. We often see this in bear markets, by the way. However, in high volume markets, especially in a bull environment or bull cycle, when there are a lot of new traders in the markets and the volume is very retail driven, you usually don't see these scam weeks everywhere. You see sustained trends. And here you see we closed down here and it actually produced a sustained trend down. Let's look at another pressure zone. For example, this one. This was even tighter, as you can see. And price was doing this. So the first thing to look at in a situation like this is, what is violated more, resistance or support? In this case, price actually respected support more and better than resistance. As you can see, it is approaching resistance and it's closing above this cloud border here. It's closing up here, but it didn't do this with the support. So there's a tiny hint that bulls might be stronger here. However, sometimes you don't see how it will turn out until the very end. And once again, you see a sharp sell-off here, a close at and below, even below the yellow cloud here, and it crushed all the green ones here. This is very hard to see because it is, it's so narrow. That's actually very hard to see. But this close here was the most bearish one of all the closes. We had this one. This could have indicated a move up. However, you can see resistance is still scattered around here. It's too early to move higher. There's not enough pressure to do this at this point. The more experience you have with Cloudy, the better you will understand how this works. But this is the pressure zone we are looking for. And as you can see at the tip of it, at the very end, where it's become very narrow, you see a sharp sell-off into support. This is a warning sign. And I would get out of the long at this point, especially considering there are lower highs. This comes on top. So the trend clearly tells you it's going down, despite the tiny hint in before that bulls might be stronger here. You have to look at the weak signals. This is very delicate. But if you learn how to read this properly, you will be able to trade this very, very efficiently and make a lot of money. There's no easy way to make a lot of money. You have to put in effort and work and learn. And in trading basically it's a learning story. You have to educate yourself, become a better person, control your emotions, and all this stuff you probably already know about. And if you learn new techniques like this one, you have to master them. You have to train yourself in using them. Sure, you will get setups that don't work. You will get stopped out. It's perfectly normal. It won't ever end. You can't get an indicator or strategy that has a 100% strike rate. It's simply not possible. However, the more you train, and if you actually master this tool, you can trade all markets all the time without doing much analysis and simply applying your knowledge, what you have of price action and dynamic support and resistance, and you can find opportunities to make money, like this one, for example, or this one, all the time, on all assets. This is why this is so valuable. You don't have to take trades that are uncertain. For example, in this region, would you short this? It's in resistance, yes. Sure, you could short it and place your stop loss up here, but after this kind of move, it could easily go higher. There's a strong momentum here. I wouldn't trade this, not necessary. Wait for a better entry. Look, for example, for something like this, where the clouds are almost going horizontal and price is getting rejected repeatedly there. This is a sign that this is distribution, especially if price is not able to push the resistance higher and resistance firmly remains at this level and it's red and purple. If you got something like this, you can be sure that you have an excellent risk reward. So it's worth to take these trades and not the ones you're uncertain of. Yeah. I'm not sure if I covered everything I wanted to. But I will anyway. I will probably do a more in-depth session on that. This is just a basic overview on how to use Cloudy as a trading tool, where to put stop losses. The same logic applies to profit targets. For example, if you enter a long here because the support is getting stronger and brighter, you see price is making some kind of bottom here, you can certainly enter a long here. You see it's approaching resistance. I would start taking profits from here on, where the clouds are. You can look at levels. For example, you have a big level over here. You have a big level here. And there are some levels for you to take profits at. But I would already take profits below this, below the clouds. To be sure, in case it reverses there directly, which happens a lot. But you can do this as you wish. If you don't want to use profit targets and simply enter and exit, you can do this also. You can enter here and exit here. Nice trade with a stop loss here maybe or lower, depending on this maybe. Very excellent trading opportunities all the time, 24/7 on all assets. And you don't have to use a shitload of indicators and tools and whatever. You just need Cloudy, your brain, and what you know about price action, trend momentum, levels, trend lines, all this stuff. And you can easily trade the markets this way. But let me say this, Cloudy is one indicator. You can, there are tens of thousands of indicators. Sure, you can use different one and get the same results. Indicators are meant to be, they are meant to assist your trading. They are not meant to get rid of your efforts and for you to stop thinking and reflecting and analyzing situations. You still need to do this, because if you want to swing trade, for example, with Cloudy, you would want to put in more thoughts and flesh out some scenarios and think about how this could turn out, and then add Cloudy as additional confirmation or invalidation. You could do it like this, but you don't want to simply rely on what Cloudy is telling you. Never do this with any indicator. Always use your knowledge and don't be too lazy. Even though this indicator can tell you a lot, it's not perfect, and it only tells you about one particular thing in the markets, not about all the circumstances. You don't know how strong the trend is based on Cloudy. You also don't know how strong the technicals are. For example, if you look at divergences, stochastic, RSI, whatever, you don't know about the macro trend. You don't know about static support and resistance. So it is worth looking at that all the time, independent on whether you're using Cloudy or not. This also ensures that you are covering all the important aspects in the market, and you're honing your skills and abilities to understand price action, even without indicators. As a technical analyst and a trader, you want to have the skill, of course. You can see a level here, for example, which was support, and now it is resistance. You don't need Cloudy to tell you there's resistance here. You know there's a level. So if this rejects here, comes back down here, you know the support clouds are over here. It might make a higher low. If it is weak down here at these support clouds, you know what to look for. If it closes within the clouds, get out. If you're in a long, let it play its down move and look for a better entry. If it gets above, you know where the resistance clouds are, and you know that we might expect a retest of this level. So you wait for rejection here and a retest and maybe higher. And if this rejects again, it will probably do an M shape and get back down. You can come up with so many different scenarios and ideas based on Cloudy and price action, and by simply thinking about it. This is, I've been talking about the 15-minute chart all the time. Let's have a look at a higher time frame one, maybe the 4-hour chart, just to give you an example of how to trade higher time frames, or medium time frames in this case. And so there's something special about the medium and higher time frames, because as you can see, we are in a bull run here. And it is very typical for a bull run to see price moving alongside the resistance clouds. And you often don't even see support clouds. For this, you need to increase the tolerance. For example, I have 0.45. Let me increase this to 1.3%. And you will see that the support clouds down here become visible then. I will talk about the settings in the next session, next video. This is just to give you an idea of how this works. As you can see, the clouds appear, although there's not much going on here. But in a strong uptrend, you have the momentum up, so you don't need that strong of support to actually produce strong up moves. The trend is the superior concept. If it's strong to the upside, you don't need yellow and teal support to drive price higher. Very important to know. And on the flip side, if you're looking at the resistance, it gets broken, violated here, violated and broken. This is normal for a sharp uptrend because the trend is superior. If you see a trend like this and it gets broken all over again, you have several things you can do. Either you mess with the settings so that the resistance clouds are have a wider margin to price action, so you can be sure that you don't have these cases, you don't see these cases too often that these ranges get broken. Or you simply don't even look for short opportunities here and just look at the support clouds and enter your longs there, your swing trade longs. It is very feasible to do this. These settings are not good right now. It's just, I didn't even change them. These are the 50-minute settings. But in general, you would have a similar chart as the previous one we had at the 15-minute chart. But as you can see, we have a special situation with this very strong uptrend. In this pullback, for example, you can see that price started to violate support. This is a sign that there is very strong force down, but the support is becoming stronger by the day. And once price bounced off the top of the clouds again, it was confirmation that now bulls are strong enough to keep going, because this support was used as a launch pad. And this is how it works. It gets launched up. As you can see, it's meeting up with resistance here, violating and breaking it again, and then coming back to the support area again. And it repeats all over again. Support, bounce, sharp move down. And now we have our warning sign that this might not hold because it's simply too strong to the downside. And we see this grind at support. This is usually a sign that we will go deeper. And then we have the strong bounce off this support again. Confirmation that we will go higher. We went higher. And price had troubles breaking this resistance, gets rejected, crushes the support zone here. And this is confirmation enough that we are seeing a major downtrend. And from this point onwards, there was no real support anymore. It got broken all the time. And right here in this current range, we just, again, because the momentum is down in this trend, it respected support a little bit over here. But as you can see, the rejection at resistance was very strong. Again, sharp sell-off. Warning sign first, second warning sign. And when it came back down, closed here, it was basically confirmation that we are again entering a new downtrend phase. We don't know what will happen here. It could find a bottom here already, but it could also not and go deeper. Yeah, this is how you can use Cloudy on the medium time frames, for example, although keep in mind the settings shown here are not optimal. In the next video, I'm going to talk about how to use this for all the time frames, different settings, how to read them, what they mean. Yeah, this is a very big topic to explain. Okay. I think it's inevitable that I have to do another video on that, because I've probably not talked about everything I wanted to. But we will see. You can give me feedback if there are questions left where you say, hey, I absolutely need to know this. This is a question that is very important to your trading with Cloudy, for example. Let me know. In the comments or in Discord, in the Cloudy Early Access group or channel. And yeah, I'm going to make another video covering the leftover stuff. Good, this is it for now, and have fun trying out this indicator. Yeah, let me know how it goes. If you think you can use it for your trading, if you maybe already made some profitable, some successful trades. It's awesome to hear about your success stories as an indicator developer. I want to make our trading life as easy as possible and give us the opportunity to make money easily. But we have to keep in mind knowledge and maturity and wisdom. We all need we need this. An indicator will never substitute this stuff. We need to become. We need to become, and we need to remain people that know how to preserve capital, how to do risk management, how to read the charts in general, when not to trade, when to enter, when to exit, when not to enter, when not to exit. These things have to be learned, sometimes the hard way. And no matter which indicator you will use, you will encounter the same problems over and over again. Otherwise, trading would be too simple and we wouldn't have 95% unsuccessful people in the market. So with this being said, have a nice day and see you next time.